Welcome back to your market update with me, Tradespotting. In today's show, we have a breakdown of that CPI data along with the most important points to be aware of, earnings at the Mouse House, how they came across, how the markets are likely to respond to both points tomorrow in the distribution of probability, along with some breaking news straight out of the tech sector in China. So stay tuned and hit that like button. Investors digested that latest consumer price index report showing inflation in line with expectations, spurring bets that the Fed will cut rates before 2024. The closely watched CPI report for April showed a 0.4% rise in CPI, which matched expectations. On a year-over-year basis, core CPI rose 4.9%, easing from March reading of 5% plus. Analysts are hopeful that core inflation will come down towards the end of the year. A closer look into the figures shows a 0.6% increase in core goods prices, nearly entirely due to a 4.4% gain in used vehicles. We also see a 0.4% increase in core services, most of which comes from a gain, rises in yield rental rates themselves due to meet the Fed's rate rises. Rental inflation then looks logarithmic. Overall, this gives credence to the possible pause in June. If the main driver of inflation is clearly the Fed's rate rises, then this would be a signal that the cycle has run its course. The question is it secondary inflation? The futures price differential, 0.49 probability that the Fed cut rates by 25 basis points in September. And turning to bonds now, the Treasury yield slipped after that inflation data. Longer end 10-year down 6 basis points to 3.4%, while the more rate-sensitive 2-year also down 6 basis points to 3.9%. And as promised, over at the Mouse House, earnings came out. They were a little disappointing, not too fantastic at all. Disney Plus lost subscribers for the second straight quarter. That was not anticipated by a lot of analysts, dropping to 157.8 million from 161.8 million. However, ESPN and Hulu subscribers increased. Disney's revenue grew by 13% to 21.82 billion, driven by parks, experiences, and products. The CEO, Bob Iger, back in charge, stated satisfaction with the streaming business's improved financial performance. Operating income from parks, experience, and products was up 23%, while Disney media and entertainment distribution dropped 42%, as we anticipated, having heard negative news from big media peer Paramount earlier. Earnings then have still been driving the largest movers in the short-term securities with a fantastic hedge trade yesterday, one of the safest opportunities of the day. Long AKAM technologies, AKAM, and short their peer TWLO. For the counter, TWLO retreated more than 15% on a weaker than anticipated outlook, while AKAM was among top gainers of the day. That sort of counter trade is how you hedge risk. If you're new to this, make sure to catch a live show. Breaking news now from the Chinese tech sector following the US Public Company Accounting Oversight Board and their report into unacceptable rates of deficiencies in audits performed by KPMG in China and PwC in Hong Kong. The board found 100% of those audits performed by KPMG and 75% of those by PricewaterhouseCoopers that were inspected by the board had deficiencies. The PCAOB utilizes this new Holding Foreign Companies Accountable Act, the HFCAA for those who like the abbreviations, to determine companies that it cannot fully investigate because of their foreign jurisdiction authority. The law requires the delisting of companies from US exchanges if the PCAOB is unable to audit them properly for 3 consecutive years. So the clock is ticking. This has implications for those who trade Chinese stocks on US exchanges. Follow Rocky Outcrop and join his Discord to get an expert's take on the Chinese tech sector and be prepared for potential market volatility in the coming days and weeks. Let's look ahead now to the markets tomorrow and the distribution of probability to help you with your trade. SPY on the 4-hour time frame, where a number of opportunities jump out at us. Price action, when it was below this 50 simple period moving average, came to a support level that we identified because of a previous gap, and it managed to recover. It was also noted in previous videos that when SPY was below 410 on the weekly candle of any of the preceding 3 to 4 weeks, it recovered so that the body close was above 410. So a buying opportunity in an uptrend then. And we found support at that previous gap below. If we are to move to the top side, we see another gap comes in at around 415, closed at 415.30. If that doesn't hold as resistance, we'll aim for 420 and above at 430. I'll touch on why in a second. If we break down, the first place to target would be this gap, closed then at 407. If that doesn't hold, we have a linear trend and a 200 period moving average along with other gaps closed at around $400. And then zoom down, out, wider, and show you the current price action at this moment in time has been going sideways. And if we're also to turn on the indicator and look at the RSI, we can see there's a touch of divergence, though we persist above the center line. And the question then becomes, is this a peak not unlike these others, or is it similar to what we see at the lows in that it's putting in a rounding formation? And that would speak to price action potentially testing support. If we go to the larger formation here on the 4-hour time frame, we can see that price action has been hitting horizontal levels of resistance while finding support at increasingly higher levels. That's the higher lows. And that means that price action is being forced into a tighter and tighter range, always persisting towards the top side of resistance, but finding increasingly higher support. So that's an uptrend with a touch of consolidation and the potential for a breakout. If it does manage to hold then, even if it does drop back down again, we would anticipate testing higher levels. The highest level within this formation is in at around 430, and that's what you'd be looking to on SPY if it breaks up. Should it go any further, you'll see absolutely huge moves that will take you up to around 450, 460. But for now, we're looking at hold support, recovered the 50 simple period moving average. If I zoom back in again and show you exactly what that looks like. When we were below 410, it represented a buying opportunity, and we're back above this 50 simple period moving average, which we find at that 410. And now, if we want to get closer in and see what might be happening with regards to volatility, we have VIX again holding this channel, despite the fact that SPY pushes to the top side, only half a percentage point move today, so potential for a lot more volatility and VIX moving. If it is that SPY does collapse back down and we find support at 47 or 400, it could be that you push up on VIX and target 1777, 1888, or in at around 1999, $22 if it goes even higher and you find resistance at the center line, which is also where you find the 200 period moving average. If you look to the daily time frame with the 50 simple coming in at around 1950 and those first targets we spoke about. So if SPY breaks down, that's where you'll see VIX going. Alternatively, if SPY makes a sharp move to the top side and VIX doesn't maintain the integrity of this channel, we'll look to the previous lows. We also find them on the daily time frame. When we pop our cursor over here, see first target is the low within this formation already, where we find price action. If that breaks, you're coming down to test $14 or 14 and change. If that doesn't hold, you can see that you look left, the next low comes in at around 12.11 spot 80. And that's where we see the biggest moves on the stock market come in, when VIX finds itself in those sorts of areas. So lots of opportunities come in on the charts, not just immediately tomorrow if the trend continues, but also long term. We can see that there's huge moves coming and sure to be lots of volatility included. Thanks very much for watching. Hit that like button and tell your friends about this show.